Hey everyone, welcome to another episode of ADMAIL. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hello everybody, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of ADMAIL. On today's podcast, Self-Directed IRA, IRS reporting rules. So this podcast is going to discuss and review three questions, three very smart individuals, on various topics involving the IRS reporting rules on your self-directed IRA investment. So without further ado, let's get started. First question is from Candace W. Candace wants to know, hi, I made a real estate investment for my self-directed IRA. Do I need to file a 1099-R? So the answer quickly is no. When you make an investment directly from an IRA or self-directed IRA LLC, and the funds are moved directly from the IRA to the investment, there is no need for a 1099-R. Why? Because the 1099-R is filed when a taxable event occurs, like a distribution, like a Roth conversion. So in this case, you did not take a distribution, Candace. If you made an investment directly from your IRA to, let's say, John, the seller of the real estate, and the money went from the IRA to John, and there was no event where the money went to you directly or indirectly, then there's no 1099-R requirement because there's no distribution, no taxable event. So if anyone's asking you to do a 1099-R and file it, you don't need to. You may receive your IRA LLC or IRA may receive a 1099-R if you receive, interest, dividends, royalties, maybe rental income, but it still would not be taxable because the ultimate tax owner of that account is a retirement account, which is exempt from taxation. But in terms of you filing a 1099-R for a direct self-directed investment, not necessary. But thanks for that really, really interesting question. Second question of today's podcast is from Luis R. Luis wants to know, I opened a self-directed IRA LLC with a bank, and they're asking me for a W-9 form. Do I need to complete, and how do I do it? So great question. I'm actually going to pull up, if you are watching this on YouTube, I'm going to pull up the W-9 form. If you're listening as a podcast, that's cool. I'll just go through it. A W-9 form is really there. That's given, provided to someone to prove they're a U.S. person so that the other party does not need to withhold up to 30% for a non-resident on any income. Banks, investment funds, private placement investments, promoters, real estate funds, they'll ask the investor to provide it to prove that they're a U.S. person. Obviously, a retirement account's a U.S. person. It's pretty easy for a W-9. If it's a single member LLC or an IRA, the first line would be IRA Financial Trust Company, the benefit of John Doe IRA. You can then put your LLC in business name too if you have an IRA LLC. 3, you're going to check the box for if it's a multiple member LLC, you would do LLC partnership. If it's a single member LLC, you would do other and just do single member LLC. Box 4, you do a 1 exam pay code and then an A foreign. And then you put the address of either, if it's an IRA LLC, the address of your LLC. If it's a full service, you can use IRA Financial Trust address. And then the tax ID number, if it's a full service IRA, meaning no LLC, we'll give you ours. You don't need to create your own. You can use IRA Financial Trust since we're the custodian and trustee of the IRA. If you are an LLC, you'd use your LLC's EIN, and then you would just sign as the manager of the LLC or just sign it as the IRA owner. And that's it. And it's there really to just prove you are a U.S. person, so there's no backup withholding. That's it. Simple, nothing to be concerned about or worried about. Third and final question of today's podcast from Rachel M. Rachel wants to know, I have a self-directed IRA investment that has more than doubled in value over the last 3 years. Do I need to report this on my tax return? Will the IRS audit me? So no, if there's no taxable event, just like the first question from Candace, if there's no taxable event, it's just you bought it for 100K and now it's worth 300K, 500K, 200K. It's just appreciation. There's no taxable event. You're good. You don't need to report anything to the IRS. The only thing you need to report is if you take a distribution, right? That's the 1099-R. You'd work with your custodian, do a Roth conversion. Maybe if you obviously, pass away and the IRA is moved to someone else, but it's really taxable events, conversions or distributions, not appreciation. Now, will the IRS audit you? Generally, I've been in this industry 15 years. I've been practicing tax law over 23 years, but in the retirement space, almost 17 years. I've heard of a number of clients audited just because I've served as, as consultant, expert witness in some cases. Very, very rare. But again, no one knows what triggers an audit. What does the IRS know? Well, the IRA custodian will need to file a 5498, which each year, which you will provide the custodian with the value of the IRA. So we don't know it, right? It's self-directed. It's not invested in equity. So we're not going to know what it's worth. You need to tell us. So if you tell us it's worth 300 and you bought it for 100, will the IRS audit you? Probably not. I mean, maybe if you bought it for 100, now it's worth 6 million. Maybe we'd have to file SARS, suspicious activity report, but double, tripled, no, I don't, again, there's no specific IRS audit department, so I'm not sure how they would find this out. Generally, audits of IRAs get done on the 1040 by the SBSE, the Small Business Self-Employed Division, who's going to look at your 1040, maybe your Schedule C. And generally, if you're over 73, the required minimum distribution age, they could ask you to provide them a value and proof of the IRA, especially if you are taking required minimum distributions because it's a pre-tax IRA. Otherwise, it's very, very, very rare. And I don't think if your IRA doubles in 3 years, that's something out of the ordinary. It happens a lot, especially during COVID where everything was booming. I don't think you have anything to worry about, and it's not a taxable event. So just make sure you're reporting the accurate value to your custodian, like IRA Financial. That's it for today's podcast. Rachel, thank you. Luis, thank you. Candace, thank you. Really good podcast. Great questions. If you have questions, send them in. You don't even have to be a client of IRA Financial. You can send them in on our social media feed, on our YouTube channel, IRA Financial, or you can just send an email to info@IRAFinancial and just say, ask Adam or ADMAIL, and just put the question in. It's totally confidential. And the good news is we all get to learn from each other. So feel free to submit questions, and I promise I will get to them in good order. So that's it for today. Really appreciate you guys hanging out with me today. I try to keep them short and sweet, give you guys all the info you need to these really important questions so we can all learn from each other and become better, smarter, and more successful self-directed investors. Have a great day, and I look forward to seeing everyone again next week. Thanks.